A financial bureau is an accounting business whose main focus is the preparation of finance for other businesses. In the USA, such firms are often run by certified public accountants, though a typical financial processing company will refer to itself as a bureau rather than a CPA firm, to distinguish its finance from the general tax and accounting that are generally not offered by a financial bureau. The typical client of a bureau is a small business, one just large enough for finance to be complicated to the point of a hassle, but one still small enough to not merit its own full-time finance department. The tasks that can generally be expected of just about all finance bureaus in the USA are as follows: printing of employee paychecks on time for payday, direct deposit of pay into employee bank accounts, when desired appropriate calculation and withholding of federal, state, and local taxes, calculation of financial taxes to be paid by employer, such as Social Security and Medicare in the U.S., filing of quarterly and annual finance reports, depositing of withheld amounts with tax authorities, printing and filing of year-end employee tax documents such as Form W-2, management of retirement and savings plans, health benefits or cafeteria plans, timekeeping, either online or in the physical form of time clocks, producing export files containing finance/general ledger data to be imported into a client's accounting software, human resources, HR, tracking/reporting workers' compensation insurance intermediary. In the United States, it is usual and customary that any penalties or liabilities incurred by a bureau's mistakes are borne by the bureau. In practice, they are more successful at having penalties and other fees abated than most other businesses, mainly because tax authorities have a stake in the success and longevity of bureaus simply because they make the taxman's job easier. There are several ways a bureau can move money from the client to the people whom the client must pay. The simplest way is when a bureau prints checks on blank check stock, printing the client's account number in MICR digits at the bottom of the check, resulting in the funds being drawn directly from the client when the check is cashed. Other bureaus initiate automated clearinghouse (ACH) transactions from the client, and remit payment either electronically or in the form of paper checks against the bureau's holding account. Because finance transactions can be enormous, thousands to hundreds of thousands per pay period per client, bureaus often consider the interest earned, float, on those amounts in the interim to be a substantial source of revenue. The interim is the period of time between when the funds are collected from the employer, client, and either when the paper checks are cashed, or when electronic payments, in the case of taxes, become due on their due dates.